Okay, good afternoon, everyone. Welcome. We are so excited that you are here for HERstory 2025. My name is Marina Batliwala, and I'm honoured to be facilitating the program tonight. I'm a principal and I'm a senior investment consultant in Mercer's Wealth business, and I'm also the proud producer and presenter of a podcast called Banking on Girls, which highlights the importance of financial literacy for girls and young women. The views on the podcast are my own, but the gender wealth gap, which highlights the importance, the gender wealth gap, which impacts all women of all socio-economic backgrounds, is what I'm most passionate about. And as a mother of three, financial literacy is a topic that is very close to my heart. Our theme this year for HERstory is Mastering Money, Financial Resilience for Women. And you're taking an important step tonight in your personal journey to build skills and confidence so that you can achieve long-term financial independence and financial security. That financial confidence is important for so many reasons, including having the ability to withstand a financial emergency, as we've all just seen, or to be able to leave an abusive relationship, to know how to navigate the financial challenges of old age, and of course, just to be a role model for the next generation of women and girls. It's so important. But before we get the program underway, I have a few housekeeping items. If you need English to Spanish translation services, please go to the table at the back of the room and pick up your headset. If you need to use the restroom, it's out the back as well, just outside the Learning Centre. And there are refreshments, as you can see, to the tables at my right, and they'll be replenished during the networking hour. Now we have a few welcome remarks from a few very important women. First up is the Chair of the Commission on the Status of Women, Vanessa Rodriguez. Please welcome her to the stage.
Thank you. Hi, good evening. Thank you all for being here, and it looks like the sun has smiled upon us, so feels like it's extra exciting for us all this evening. My name is Vanessa Rodriguez, and I have the distinct privilege of being the chairwoman of the Commission of the Status of Women here in the city of Pasadena. But I am only one of the entire commission, so if I can have my fellow colleagues and ladies stand up. We are all better together, and this has been such an incredible year for our commission. So thank you all. Our mission is to highlight the special needs and concerns of women and offer solutions and programs that promote and ensure equal rights and opportunities for all women in Pasadena. This year, we have focused on financial inequities. I hope you will all stop by the commission table in the back where you signed in and join us in our effort to challenge the city, support the city of Pasadena to take the California Equal Pay Pledge. It is something that is near and dear to our heart and isn't just a woman's issue, it's a family issue, it's a men's issue, it's an everybody issue. So please join us in pushing our city forward with that pledge. There is work to be done citywide, but there is also important work that each of us can do as our individuals and for our families. We hope tonight's program will empower women at every stage of life to take control of their finances, build a foundation for security, and develop strategies for financial recovery. Your attendance tonight shows that commitment, and we are so grateful that you have all come out today. It is an understatement to say that our community is reeling from collective trauma after the Eaton Fire. Many women in our community face financial uncertainty, displacement, or unexpected expenses. We are keenly aware of the importance of financial planning and preparedness in the wake of disaster. We are pleased to have so many community organizers represented here tonight, our second responders as they are. And we are here to make sure that we are providing resources for you and your loved ones. So also thank you to FEMA, who we saw earlier, to check in. Please make sure to visit the tables around the perimeter of the room during the networking break for some additional information and resources. And finally, in moments of crisis, there are always exceptional women that step forward and lead, who remain calm, focused, and go above and beyond their duties. We got to know as a commission Captain Jody Slicker of the Pasadena Fire Department, where she was a panelist at last year's HERstory event. Please join me in an outpouring of public gratitude for her extraordinary leadership during the Eaton Fire. Captain Slicker, will you come forward, please? I will also say, Captain, my son is a huge fan, and I have an almost 4-year-old daughter, and when my son and I were telling her about tonight's program, she said, "Mom, the fire captain is a lady?" And I said, "She sure is, and she'll grow up knowing that anything is possible." So thank you so much.
Well, thank you. Thank you so much, Captain Slicker. Thank you, Vanessa, and thank you to the entire Commission on the Status of Women for the important work you do to uplift women in Pasadena. Our welcome speaker, Senator Sasha Renee Perez, was born and raised in Alhambra. She became the first in her family to graduate from college, earning degrees in political science and economics from California State University, Los Angeles. While in college, she led a statewide campaign that successfully secured $97 million to increase college access and affordability to all California students. Senator Perez was elected to the Alhambra City Council and became the youngest female mayor in San Gabriel Valley history and the youngest Latina mayor to lead a city of more than 50,000 in California. She served as a political director for the Yes on Prop 1 campaign, which added the right to abortion and contraception to our state constitution. She was an appointed commissioner of the Los Angeles Homeless Services Authority, and last November she was elected to represent the 25th District in the state Senate. Please welcome California Senator Sasha Renee Perez.
Good evening, everyone. I'm Senator Sasha Renee Perez, and I'm honored to be with you all today for the Pasadena Commission on the Status of Women's HERstory event focused on financial literacy. I'm thrilled to see all of you here this evening as we delve into a topic of utmost importance, financial literacy. Understanding our finances is a vital skill that empowers us to take charge of our lives and our futures. Financial literacy is more than just understanding numbers. It equips women with the confidence to make informed financial decisions. It allows us to shape our lives and take control of our economic destiny, whether it's budgeting for a family, investing in education, or planning for retirement. The skills we gain can help break the cycle of financial dependency and foster independence. Now, I want to share with you all, a little bit of a personal story. And to start off, I was very blessed in that a lot of the financial literacy and knowledge that I gained was from my mother. And I think that that's really important to share because so much of the financial literacy that we learn as women comes from our mothers. We learn from them, and so much of the knowledge that we share. And so just by each and every one of us educating ourselves in this room, we serve as conduits for other family members, whether that be our daughters, our sisters, our cousins, and we have real impacts on their lives. But throughout my time, before I came here into this role, I used to work for the California Endowment and did lots of work with the East LA Women's Center. And I can tell you as someone that has worked with those that have experienced domestic violence, that oftentimes domestic violence is accompanied with financial abuse. And so financial literacy not only becomes a tool for us to empower and to protect ourselves and to better make financial decisions, but really in times of crisis, can serve as education that we use to better protect ourselves when we are in these kinds of situations, and to also empower other loved ones that may be facing abusive and very challenging situations. So, do want to highlight that it is an incredibly important tool for all of us to use throughout our lives, and something that's very necessary. This evening's gathering reflects the strength and diversity of our community. Your participation is invaluable, whether you're just starting your journey, you're a seasoned professional, or you're anywhere in between. And I just want to take a moment to also emphasize the significance of financial literacy for young women of color. According to a recent study by Hispanos Organized for Political Equality, only 41% of Latino households in California hold retirement accounts, compared to 68% of white households. And the median value of those accounts is $30,000 and $115,000, respectively. Research from the Institute for Women's Policy Research indicates that Black women are more likely to face high levels of student loan debt and have lower rates of savings compared to their white counterparts. This disparity can further complicate their financial literacy and planning. Financial literacy rates among API women vary significantly due to cultural differences and socioeconomic factors. And according to a report from the National Endowment for Financial Education, about 50% of API women report feeling confident in their financial knowledge, which is on par with the national average, but can vary widely across specific communities. So we must equip our emerging leaders with the tools and resources to thrive. When we invest in their financial education, we are creating pathways for economic independence, and breaking cycles of poverty. Empowering young women of color through financial knowledge benefits them individually and strengthens our entire community. I'm excited to see tonight that you all will be hearing from a remarkable group of presenters, each an expert in their field who are eager to share their knowledge with you. Our discussions will cover budgeting, savings, investing, and other topics aimed at improving your financial skills. I encourage all of you to actively participate, ask questions, share your thoughts, and connect. Let's create a vibrant space for learning and empowerment together. And a heartfelt thank you to all of the sponsors, the partners, and the volunteers who have made this event happen, who have given their time and their resources to bring all of us together. Your commitment to uplifting women in our community does not go unnoticed. As we begin this evening of learning and exploration, I encourage you to engage with the lessons and discussions. Make connections with each other. Financial literacy is essential for all women, and by participating, we can work towards making it accessible for all. Thank you all again for inviting me to join you, and I look forward to today's discussion and today's learning.
Thank you so much, Senator Perez, for your inspirational words. Those dire statistics can be changed, and we hope we're taking some of the first steps today to change those statistics. Our next speaker has dedicated her career to public service. She previously served as Deputy Attorney General with the California Department of Justice, a Deputy County Counsel with the County of LA, and as a Major in the U.S. Army Reserve. She currently works as a staff counsel for the Los Angeles County Employees Retirement Association and previously served on the City of Pasadena's Northwest Commission and the Commission on the Status of Women before being elected to the City Council. We are honored to welcome Vice Mayor Jess Rivas to the stage to bring greetings from the City of Pasadena.
Thank you so much. It's so great to be with you, with all of you here tonight. And what an honor to share the stage with Senator Perez, Chair Rodriguez, Captain Slicker, all women who I admire and look up to. I'm always honored and excited to attend this event. As was just mentioned, I served on the commission for several years, about 3 years, I think. And this was one of my favorite events to put on. And so I'm so grateful that each of you is here today. I also want to just take a moment to kind of talk up the commission, because I feel like the city has a lot of commissions, and the Commission on the Status of Women sometimes gets lost in the mix, and it's a really important commission. Commissions in general are a training ground, a bench, the minor leagues, whatever sports analogy you want to use for the city council. And the Commission on the Status of Women, I think in particular, is very well suited for that, because it deals with issues that cut across everything the city does, because all of those issues affect women in some way. And so I want to thank Chair Rodriguez and the entire commission for taking this charge seriously and not confining themselves or taking a limited or narrow view of women's issues, but really taking a wide angle and examining all issues across the city in ways that we can improve the lives of women and residents in our city. I also have the honor tonight to recognize our dignitaries. I think we've acknowledged many of them already. So why don't I start with just, again, recognizing everyone here for attending. Thank you for being here. Thank you, Senator Perez, for joining us. Thank you, Captain Slicker. I also saw our Police Oversight Commission member, Florence Anang, so thank you so much for joining us. And I also see our Pasadena Job Center workers are here with us as well, so thank you for joining us. So without further ado, I'll turn it on over, and thanks again for being here. I'm really excited for tonight's event. Thank you so much.
Thank you so much, Vice Mayor Rivas. Her story tonight could not happen without the support of the City of Pasadena and specifically the Parks, Recreation and Community Services Department. We are so grateful. Now let's get to the topic at hand. Why are we here tonight? Women in our community face significant financial challenges, and in times of disaster, those vulnerabilities are magnified. But there's good news. Participants in financial literacy programs show an improvement in financial management knowledge and in motivation to adopt good financial practices. Both of these are crucial for financial stability, especially in times of recovery and rebuilding. So what do we expect tonight from the workshop? This workshop hopes to empower you with practical financial skills, disaster recovery strategies, and long-term planning tools to build financial resilience. Through our expert sessions and networking, you're going to gain actionable insights to take control of your finances, recover from hardship, and plan for a secure future. Tonight's presenters are all impressive. They're all subject matter experts, and they're women just like you and me who are navigating the ups and downs of life. I'll be introducing each of the 3 mini sessions, and there will be an opportunity for questions after each session, so don't hesitate to ask. We'll also share the presentation slides with all of you, so you don't need to take snapshots of all of them, and we can send them all to you by email, along with some other resources. Additionally, Pasadena Media is producing a video of the workshop that will be available publicly. Thank you so much, Pasadena Media. So the more you know and the more tools you have at your disposal, the better prepared you are for life. So let's get started. You've been listening for a while, and now we're going to do an icebreaker, and we're going to engage you with this activity, your financial reset plan. So let's start with a minute of reflection. Please take a moment to think about one financial habit that you want to reset or improve. It could be saving more, spending less, learning how to invest, budgeting better, whatever is important to you right now. Okay. So does everyone have something in their mind? Okay. Now, find a partner. So it can be someone next to you, or you can just find anywhere in the room. Pair up with them. And we're going to put the timer on in 2 minutes. Share your financial reset plan with your partner and discuss what are the habits that you're resetting, why is it important to you, and what's one small step you can take to start today. So we'll begin now.
Okay, we're wrapping up.
Okay, let's wrap up. There'll be more time for discussion. There'll be lots more time for discussion. Okay. So clearly money is not a topic we're afraid to discuss. That's fantastic. Is there anyone who would be willing to share what their plan is? There's no right or wrong answer here, so we'd love to hear something. And we can all learn. Yep. Over there. Okay.
I'm coming to you with the microphone.
Betty, and my financial goal is to learn to invest more. And I think that one thing I can do is search out the free resources that are available, like YouTube, and a lot of investment agencies offer free courses. So I need to just take the initiative to enroll and learn more about that.
Thank you, Betty from FEMA.
Fantastic. And studies show that women don't have as much tolerance, or don't have as much confidence, I should say, in investing as men. But when they do better. So that's great. So, yeah. Okay. One more. Yeah. Anyone else? Okay.
I see you.
Hello, thank you for having this. One financial habit that I mentioned to my peers was to improve upon was share out what I'm learning. So if I already have my monthly budget run through that I do, but I would love to have an accountability with peers or friends so I can share out, this is how much I've invested this month, this is how I went over or under my budget, and this is what I'm learning. So sharing about these types of resources. So having that accountability with peers.
Thank you, Cecilia.
That's great. Accountability is actually proven to help people meet goals. And the other piece of this is that what I've learned through doing my podcast is that a lot of women are afraid to just talk about money, and a lot of families feel that it's not the right thing to talk about money, and nothing could be further than the truth. So that's a great goal. Okay, wonderful. Now, I think we are ready for the first mini session, the Financial Fundamentals for Everyday Life, presented by Tanetta Connor. Tanetta is the managing partner of the Harrington Group, a public accounting firm with offices in Pasadena and the Bay Area that solely serves the non-profit industry. In her 25 years at the firm, she has gained extensive experience in accounting, auditing, and tax services. She enjoys public speaking and teaching, so we're thrilled she'll be doing both with us tonight. And remember, there will be an opportunity for questions at the end of her presentation, so please welcome Tanetta Connor.
Hello, everyone. It's a pleasure to be here. And I'm feeling inspired, even as the accountant in the room, by some of the commentary that I've heard this evening about getting an investment and accountability. I will share that even as long as I've been in accounting, it's always still good to have accountability partners. And so even, this might have been maybe about 10 years ago, my 4 cousins and I each kind of didn't have a very significant amount of investment experience. So we started an investment club. We were a book club, and we turned the book club into an investment club. And we all just championed each other to say, each person go out and investigate a stock, bring it back, think about, tell us why you feel that this is something we should invest in, and then we would vote on it, and then we would make the investment. And it wasn't so much about what we gained or what we lost. It was that we took the initiative, that it helped us to get more comfortable with investing, and we could hold each other accountable to getting the information and to seeing how the stock performed, and it got us into thinking about it wasn't such a mystery. So I hope that maybe everybody will take that little tip and think about maybe doing that amongst your peers. So my session today, or my first part of the session, is really discussing the fundamentals for everyday life, financial fundamentals for everyday life. So the basic cornerstone of that is really, and I think it's already been mentioned today, is budgeting. The first part of this is really looking at, what do I spend? What do I get in, and what do I spend? So the couple of topics that I'll be covering today, again, part of the financial fundamentals, will be creating a budget, savings, and building a financial safety net. And last but not least, some basics about filing your taxes, I should say, and tax relief. Those 3 areas will be what I'll cover today. And so I'll move forward into sort of our first topic, which is creating a budget. Creating a budget really is a proactive plan that will allow you to do several things. It'll certainly reduce the stress related to financial uncertainty. Having that budget in front of you, sort of knowing what you're getting in and knowing how you're spending, will certainly start to relieve stress about, will I have enough to do this? What about if something comes along? Do I have a savings? How can I plan for my future? It helps you to identify how you're spending and then reduce impulse spending. Now, I want to be clear that as I talk about the budget, we're going to talk about needs and wants. We always want to make a place for wants. Wants are very critical to the process because you want to have that sort of, if I want to go out and spend on something for myself, that helps you keep accountable, that helps you stay on track. Because if we were being so rigid and only dealing with the needs, that would sort of feel punitive. And we wouldn't probably be as excited about the option of staying on budget. So we want to make sure that we make room for needs and also wants. And as part of also creating a budget, this is really what helps us set our financial goals. It also helps us save for our future. So again, the budget is the cornerstone of really being financially resilient and really taking financial responsibility. So let's talk about what it is to create a budget. What we really want to do when we create a budget is the first thing is to identify your sources of income. And I know for anybody who has a job, your first thought is always, your day-to-day. If you have a job, you think about the money you bring in from your job. But we want to make sure that we're thinking about the take-home. Often when we negotiate our job, we talk about the salary that we're given or the amount of money that we make, but we recognize that there's a lot of things that come out of that check, and the amount that you negotiate as your salary is certainly not always equal to the amount that you take home. And so when you're planning your budget, you're basing that on the take-home amount. But I want a couple of caveats as it relates to your take-home amount. For many of the jobs you may have, there may already be deductions coming out of your paycheck. Things like health care. You may pay a portion of your health care. For some jobs, they have child care, HSA, what we call health savings account, so there could be something coming out related to a health care deduction. When you look at the take home, you want to add those things back because those are already expenses that you're incurring, and you want to look at that in the totality of what are your expenses. So I just want to caution everybody that when you first look at your take home pay, if there are other deductions that are already coming out, sort of add those items back because we want to treat those as part of our expenses. We want to gather those in our information for what we're spending on. The other sources that you should consider, and if we're lucky enough to do this, we may have what we call side gigs, side hustles, all of the cheeky names for the things that we do on the side. For some people, that could be baking, and you do a bake sale, you sell goods to your neighbors, or that could be that you have, in this day and age of having so many things online, there's a lot of people who make crafts and they put them on Etsy and they put them on different platforms or they sell them to their friends. So that might not be your day-to-day job, but that may be something else you do to earn income. I know that when we were, during COVID and a lot of downturn and things going on in the economy, people started baking. They opened up shops out of their houses. They were making food because people were more hesitant. Again, obviously restaurants were closed, so people thought of ways to create income. So when you look at, again, what your sources of income, you want to look at your main job, but you also want to look at anything that you may do that might be, quote unquote, a side gig. If you're also receiving any form of assistance, that can be any type of governmental assistance, any other assistance, it could be alimony, any other assistance that you may have out there, all of that is part of your income. If you're fortunate enough to have, I guess if you were the child in your family and you were starting early on your budget, this might be the allowance you get from your parents. It's never too early to start thinking about budgets. So we want to think of all the ways we, again, generate income. The second step in that process is to document your expenses. And as I identified earlier, we want to kind of put those expenses into a couple categories. There's what we call needs, wants, and that last category can be what we call either savings or reductions of debt. Could also fall into the needs category, depending on the savings part might be more of a wish list, if you will. But if it's a reduction of debt and debt that you have to honor in minimum payments, then that might really fall under the needs. But we want to think about how we spend our money in those three categories. And so if we want to take a look at how then do we identify our expenses? Couple of ways. You could go back and look at if you already have a banking account, go back and look through a couple months of bank statements. That'll show, because oftentimes we're using maybe our bank card, we're writing checks, sometimes we have ACH, automatic payments coming out of our accounts. So oftentimes you can look at your bank statement and that can tell a lot of history of how you're spending your money. If you're someone who often uses credit cards, you can often go back to your credit card statements and look at the places where you're spending money. I know at one point in time, even when I was just spending cash, because maybe you get the cash out of the ATM, so you have cash in your hands, and then you obviously go out into the world and you spend cash. I used to make a little list of where I was spending, or I would collect the receipts and look at the end of the week and look at all the receipts that I had. So that's another way of tracking, particularly if you're spending cash, how you're spending your money on a weekly basis, maybe, and even gather all those receipts on a monthly basis and start to look at the themes, start to look at the reoccurring places you're spending your money. So when you gather all of those things together, you're going to have, again, sort of needs, wants, savings, and you're also going to be able to identify what we call recurring expenses and variable expenses. Recurring expenses are things like the rent, the utility, car insurance if you pay it on a monthly basis. So things you have to pay on a scheduled basis, on a monthly basis. Sometimes there are other expenses that may be what we call recurring, but they're on an annual basis. You may pay your insurance once a year. You may pay, but health insurance, if it's not being deducted from your check at work, perhaps you're paying that monthly. So you want to look at, again, the recurring expenses, and then what we call the variable expenses, the expenses that maybe come along, or eating out. Eating out is an expense you may incur, but that's variable. You don't necessarily do it on a monthly basis. So you're going to identify recurring and variable, and you're going to identify the needs, the wants, and sort of the saving expenses. You may already be putting a little bit of money aside in a savings account. You may already be making payments on a loan or a mortgage or debt. So you want to, again, identify all the areas. Once we analyze how much we're bringing in, and we analyze how much we're spending, we want to give ourselves some goals. We want to talk about where do we want to see ourselves, look at our future selves and say, where would we like to be? Would we like part of that to be, I'd like to have an emergency fund in the future so I can feel some comfort that if some one-time expense comes up that I have the ability to handle that. Perhaps it's saving for your child's education down the road and knowing that you need to start thinking about that now. Perhaps it could be something like a vacation. Maybe you want to take yourself on a vacation. And so you set a goal to save for the vacation. Whatever that goal is and what is meaningful to you, this is how you start to identify how you're going to reach that goal. So there's a couple different theories out there about creating a budget. And one of those common theories is called the 50-30-20 plan. And so that usually means, and again, going back to your income and going back to your expenses, that 50% of what you take in income is spent on your needs. And your needs are things like the rent, perhaps mortgage, your car note, utilities, insurance, credit card payments, maybe minimum credit card payments. Those are the needs. Those are the things you have to stay current on as part of making sure you're financially sound. And then there's things such as the wants. I go shopping, I go to the movies, I go on vacation. I might even put in there, and now in this day and age, we have all the streaming services. I have Hulu, I have, all of the platforms that you have. Perhaps you have a lot of things that are maybe wants. They're not necessary, but they are wants. So we have to think about what those are. And then we go into savings. So if we think of 50% is in the need, we might identify that 30% we're going to allocate to the wants, and the remaining 20% would be allocated to the savings or debt reduction. That other 20% is there to build that emergency fund. It's there to pay down debt. It's there to save for education. And so we think of those things. Now, I want to be clear. Once you're looking at all of your expenses, and we're going to hope, and we'll talk about this, ideally, your expenses should not exceed your income. So if you're bringing in $1,000 a month, we'll just say that, we're going to hope that those expenses do not exceed $1,000. If at first glance they do, then you need to go back and evaluate what you're spending on. And so I want to talk about that on looking at the next area is look at the goals you want to attain and really go back through how you're spending your money. Wants is usually the first place you want to take a look at. Because they are wants, they have more flexibility. And maybe you have some short-term goal that you'd like to obtain that you're willing to risk the wants for, so to speak. If you're thinking about a vacation that you would like to take, but there are more demands on your needs, maybe you'll say, okay, I'll save for that vacation next year. This year, I'm gonna not set aside as much for the vacation because I'm focusing more on making sure my needs get met. Or maybe there's a particular loan that I have, and if I could put a little bit more towards the loan, I could satisfy that loan sooner. So I'm willing to forego the vacation this year to pay a little bit more on the debt. So it's really looking at a lot of the expenses, and then also looking at things like, how can I taking a critical look at your expenses and seeing where there's areas for lessening those costs. As I talked about, right now, we have things such as cable and DirecTV and Hulu, and you think about all the platforms you might be paying for. You might go back and say, maybe I only need one of those. Maybe I take a look at my telephone bill and say, what provider do I have? Could I actually be spending less on this? Yes, I need a phone, but maybe I could get a better savings with a different provider. So you really want to look back and analyze because you're really trying to get in this balance of this 50, 30, 20. But ideally, I don't want it to be so rigid that, again, if you're spending 60 on needs and maybe you're 30 on the wants. Again, you're trying to shift it to get in that nice, healthy balance. And maybe at this point in time, just based on your needs, you're even 70 in the needs. But again, you want to try to look at where you can be more flexible. You could change insurance companies, not at the detriment of making sure that you don't have adequate insurance, but look at all the options, things like that. So just taking a critical eye at how you're really spending your money and then trying to reevaluate how you can then try to get to this, sort of 50, 30, 20, if you will. You have to look at your specific circumstances. Sure. A couple of things I just want to make sure that we talk about too is you want to analyze your budget, I would say at least annually every other year. The trigger would be life-changing events. Obviously, if you have a job and you've made this budget based on your income and then you change your job and that has a significant effect on how much you're making, then you want to revisit your budget. If there's something else that goes on, maybe you get a new, like I said, a side venture that gives you additional money that's very material, then maybe you want to go back and address your budget and where you can save more and things like that. Moving on from now creating this budget, we talked about that 20%, that 50, 30, 20, that 20% is the savings. We want to talk about building a savings or financial safety net, that emergency fund, planning ahead for specific life goals, which could be a trip, it could be a down payment, it could be retirement. I won't spend a significant amount because we do have another speaker later that's going to be talking about investments and banking opportunities, which will cover some of those points. But I want to talk about the goal of that really is to be specific, to be realistic and set the amount. I often think paying yourself first is how you really attain an emergency fund, how you really send and how you really set aside money and get to those goals. So when you think about your banking accounts, if you say to yourself, every month, once I get my income, I'm gonna make sure there's an automatic transfer to a savings account of a certain amount. When you set it aside first, it's out of sight, out of mind, and so now you spend what's left. And so if you take sort of that mentality, you start to build that emergency fund, that vacation fund, that retirement fund, that child education fund. That's how you get to those goals. So you really want to consider paying yourself first mentality and think about automating the transfers from your accounts. The last area that I want to cover, and I want to make sure I stay on time to give the other speakers plenty of opportunity to share their thoughts and insights, is talking about the basics of filing taxes and tax relief. Now, the tax code in and of itself is way too monumental to cover in the next 7 or 8 minutes. But what I really want to talk about is the obligation of filing taxes. And what I want to talk about is knowing that there's different tax brackets, that you file either as a single person, you file as a married person filing jointly, or perhaps a married person filing singularly, and also head of household. Each one of those different filing statuses has different implications, has different credits, has different underlying savings to the tax filer. There's a lot of common credits, and there's education credits, there's child care credits, there's having, a child credit, there's earned income tax credits. So it's availing yourselves to the information. Thankfully, in this information age and a lot of having the internet out there, there's a lot of information that you can research and sort of equip yourselves with understanding the implications of all those varying filing statuses and varying brackets. The other thing that I want to bring forward is, especially since we've had the fires, when there are extraordinary circumstances that impact an area, there often can be an extension of time to file and an extension of time to pay. Right now, residents in Los Angeles County, that's both businesses and individuals that live in the considered LA County or the Los Angeles area, including Pasadena, have an extension of time. So right now, the original due deadline for normally filing taxes would be April 15th. And you would normally, if you filed with your tax preparer, or if you in and of yourself filed as an individual, you could ask for an extension of time to file out to October 15th. Right now, there's an automatic extension, and not only to file, but to make payments. So it's for both. So it's understanding also that when there are extraordinary circumstances, things like national disasters or even disasters that hit a specified area, oftentimes in response to that, there can be certain tax reliefs that are made available to the taxpayer. So I would encourage everyone that whether you're an individual or whether I would encourage everyone to think about how they want to file, whether they want to be a self-preparer. There's lots of software out there, the TurboTax and a lot of other types of platforms that walk you through a lot of questions to consider all circumstances, to know whether you're going to take the standard deduction, or whether you have situations in your own life that would allow you to get a higher deduction, to either use the software that's available and out there, or to seek a professional preparer. And again, that's dependent on your own financial circumstances. But certainly think about obtaining the information that you need and seeking out that information to make sure that you're getting all of the available credits that could be available to you as an individual preparer. So I want to leave a little bit of time now at the end for any particular questions or comments, or even any shares. Yes. Yes, there's actually a lot that's interesting.
Can you repeat the question?
Oh, yes, let me repeat her question in case everybody didn't hear. The question was about whether there were any recommended tools out there for budgeting. There's actually a plethora. So what I would say though, there's a couple. There's a couple that will track expenses for you so that you can enter your data and then you can track your own internal expenses. There's a couple out there that'll help you set up your own internal budget and then have a mechanism for entering your data on a monthly basis so that it'll track it for you, and it'll categorize them into the varying categories that I talked about. If that's, there's a couple free ones that are out there. That's why I said the internet has created a basis for many opportunities to have free tracking mechanisms that are out there. A good old-fashioned Excel spreadsheet that you can have. Again, that takes a little more effort because then you're having to total, whereas if you utilize a couple of the free softwares out there, that'll total and track the information for you and create sort of spreadsheet information on where you're spending your dollars. If you want to look back at the 50, 20, 30, if you want to be able to kind of analyze it from that perspective. And then also, like I always say, and even good old-fashioned pen and and paper. Ideally, thankfully, and it depends on the tech savviness of everyone out there and people's comfort level, but I know even in sometimes I've tracked it, and when I first started out, I started out with pen and paper, so I don't want anybody to be intimidated by the fact that you have to be doing it in an electronic format. It really is just thinking about, again, how you spend your money and the money that you get in, and starting from some point. I will share that, again, I've been a financial professional for 25 plus, almost 30 years now. And when we had our share time about what we should be doing, what was gonna be my reset was going to be looking back at my expenses. Because sometimes you just get in this rhythm, and I'm in a different point in life. I've been working at accounting for 30 plus years, and so my looking at retirement is certainly very close on the horizon. And so now my goals are different than they would have been before. So I want to go back and look at the expenses, and I would trade some of those expenses for experiences. So maybe the things that I was spending on before that I thought were so important, I might want to translate that into something else. So I say it's never, even as, like I said, I deal in it on a day-to-day basis, it's never too late to just go back and say, I wanted to redirect what my wants are, because my wants may be different now than they even were a couple of years ago, and certainly 10 years ago. So I encourage everybody, at least on an annual basis, if not more frequently, again, if there's been life changes, to pick it up, take a look at it, think about how you want to direct and set those goals, and really work to reach them. There'll be some other speakers later that are following me that definitely will talk about investing and talk about setting goals and plans. And so I hope this information has been helpful to some of you to think about just getting started. Thank you.
Thank you so much, Janetta. One point that really struck a chord with me was the point about automating your own transfers, account transfers. That would be the one single piece of advice that I wish I had heard earlier. Automating not just my savings, but also my bills and expenses. It's taken so much financial stress off me. Okay, now that we are all thinking in terms of budgeting and savings, what are we going to do with the funds that we're saving? How do we protect them? How do we build our credit? How do we navigate loans and financial aid programs? So our next mini session is banking, credit and loans for financial resilience. And it hopes to answer some of those questions for you. Our presenter, Diana Herrera, built her career from the ground up, starting as a teller and advancing to regional branch manager for the Pasadena Federal Credit Union. And that focuses on exceptional service, financial education, and community impact. We're so lucky that she will be sharing her 29 years of experience with us. Please welcome Diana Herrera.
Hello, everyone. I am very honored to be part of this wonderful event. Again, like we were talking about, setting a budget and looking at our expenses really helped me as well. I didn't realize once I looked at my 3 months history of bank statements, how much I was spending on my wants instead of needs. So that really helped me, especially like she said, I am also looking towards retirement. That's what I'm looking forward toward the future. And so putting more money towards my retirement, that's my goal for me now. So again, looking at your monthly expenses really helps. As part of our legacy, we recently completed a merger between Pasadena Federal Credit Union and Pasadena Service Federal Credit Union. Both credit unions have been in the community for over 75 years, and Pasadena Federal Credit Union started with city employees. Pasadena Service Federal Credit Union started with Pasadena Schools employees and have grown to serve anyone who lives, works, worships, or goes to school in the greater San Gabriel Valley and areas of Southeast Los Angeles. Sorry. Why choose us? We're committed to enriching the lives of those in our community. Expertise you can trust. For over 90 years, Pasadena Federal Credit Union have helped members thrive, succeed, and achieve financial peace of mind. We are committed to delivering the best digital services to help solutions to help manage your finances anytime, anywhere, via your smartphone or home banking. You're the boss. As a not-for-profit financial institution, we answer to you, our members. Profits are returned back to our members through better rates and lower fees. Convenience. Being part of a co-op network means you also have access to over 30,000 free ATMs and 5,600 share branch locations. That's more ATMs than B of A and Wells Fargo combined. For Pasadena Federal Credit Union, community comes first. We have built a reputation for serving our community even beyond great rates on loans and deposits. We partner with communities to help them thrive and succeed. Again, since we have been in the community for 90 years, we have partnered with such community partners as Pasadena City College, Pasadena Public Library, Pasadena Fire Department, Pasadena Police Department. We have sponsored their annual car show. We have done the Wiggle Walk with Pasadena Humane Society. We have worked with Union Station Homeless Services. We have partnered with several community chambers in our area, several YMCAs in the Glendale, Pasadena, and Maywood area. We recently sponsored the Maywood YMCA turkey giveaway and Christmas toy giveaway for the community of Maywood. We partner with Pasadena Village, a senior resource center, which they're doing Older Americans Month next month, and we're also a sponsor for that event as well. We've worked with Arts Center, Flint Ridge Center, Bell Gardens Police Department, Vernon Police Department, and several companies in Southeast Los Angeles. We have offered support for our community during the fires. Several of our members from Pasadena Federal Credit Union were affected by the fires. Many of our members did lose their homes, were displaced, and we're trying to offer support. We have created an emergency resource page containing important credit union announcements, local resource information. We do offer short-term emergency loans, loan payment assistance, and more for our members that were affected by the fire. We have also worked with the Altadena Chamber in offering our community center at our Lake branch as a hub to store donations and also to help distribute those donations to our Altadena businesses that were in need. Accessing loans and financial programs. Financial hardships like natural disasters, medical emergencies, or unexpected unemployment constrain finances. Knowing how to access loans and financial aid can provide much needed relief. Some types of loans available through credit unions. We offer personal loans, disaster relief loans, home equity loans, and share secured loans. Also, other programs that offer through the government and nonprofit grants, of course, is FEMA, Small Business Administration, and HUD. Those are other financial aid programs available, aside from the assistance that we're providing for our current members. For some of our services that we offer, we have online banking. You can view your balances and account history, schedule transfers, access electronic statements, customize alerts and notifications through your phone, make loan payments, set up automatic loan payments, and much more. We have a mobile app, which you can configure to use fingerprint and facial recognition, view balances and account history, schedule transfers, deposit checks through your mobile app, locate your closest free ATM or shared branch, and much more through the mobile app. Our savings products, we have savings and checking accounts, share savings, youth savings accounts, club accounts. We offer money market and IRAs. Money markets are a high yield account that provides convenient access to your funds. We also offer traditional and Roth IRAs, certificate accounts with low minimum openings, and also IRA certificate accounts as well. Managing your accounts. So understanding the different types of accounts that we offer. Checking accounts used for daily transactions with a debit card, direct deposit, bill payment. Savings accounts where you can help build your emergency fund, earn interest. Money market accounts, they're a hybrid type of savings checking account with a higher interest. Requires a higher balance but provides better interest rate than regular savings accounts. Certificate accounts is a fixed term savings account with guaranteed interest, best for long-term savings goals. A well-managed account means less stress, fewer fees, and more financial security in case of an emergency. Best practices for managing accounts: use your online or mobile banking to check your balances, deposit checks, pay bills, set up alerts. Use a budgeting tool, set up automatic savings where you can transfer a percentage of your incomes to save automatically. Use a bill pay or automatic recurring payment to set up for your utilities, loan payments, credit cards, all to avoid late fees. And this will help improve your credit score by making on-time payments. And then always ensure you have enough money in your savings or checking to avoid any overdrafts when paying bills. Monitor your transactions to protect against fraud. Monitoring is very important. I would suggest checking your accounts possibly weekly if you can, to make sure there's no fraud going on in your account. And then if you do see any suspicious activity on your account, report it to your financial institution right away. We've seen a lot of fraud happening, and this has gone on over time, and the faster you catch it, the better we can correct that for you. Understand the fees that are involved in your account. Read the disclosures to carefully take note of any applicable fees. Separate accounts for different goals. So spending, everyday spending, use a checking account. Emergency fund, set up a savings account to save for unexpected expenses. Short-term savings, maybe a certificate or club account to save for traveling, holidays, or special purchases. Long-term savings, such as retirement accounts or investments. You can look into certificate accounts that we offer. Our loan products that we offer are mortgage loans. So if you're a first-time home buyer, we offer conventional and FHA. Refinancing your mortgage, home equity line of credit, and home equity loans. We also offer reverse mortgages. Signature loans, lines of credit, share secured loans, vehicle loans for new or used autos, refinancing, recreational vehicles, lease buyouts. We also offer an auto buying service, and I'll talk about that in a minute. Credit cards with very competitive low fixed rates, zero balance transfer fee, zero cash advance fee, no annual fee. There's reward options. We have a great selection of loan products. Build and protecting your credit. Especially after a hardship, whether it's job loss, medical bills, or natural disaster, or any hardship that can shake your financial stability, you can still rebuild your credit. Examples of what you can do to recover your credit and get back on track. Ask your financial institution about debt assistance programs such as payment deferrals, reduced interest rates, and refinancing options. Prioritize essential bills such as rent and mortgage, auto loans, utilities, credit card bills. Protect your credit from fraud and identity theft by freezing your cards when lost or stolen. Enable credit alerts. Be wary of debt relief scams. Pay your past due accounts strategically. Most recent past due accounts first, then high interest rate debt, and charge off and collections last. Lower your credit utilization to below 30% for best results. If your credit cards are maxed out, pay your balances gradually to show improvement. If you are overwhelmed with debt, consider working with a nonprofit credit counseling agency such as GreenPath. Protecting your credit, make every payment on time every month. Keep your credit card balances low. Don't apply for new credit unless you need to. Don't ignore your bills. Even if you think you don't owe the money, sometimes part of fraud is you might get a bill in the mail and you said, I didn't apply for this credit card, but fraud may have happened, so you still want to investigate it and look into that bill, even if you don't think you owe it. Again, it could be fraud. Or if you can't afford it, I would consider talking to the credit card company and asking them to look over and see if they can reduce your payments or reduce your interest. As a credit union, we try to work with our members on their debt. So if they have loans with us, we try to work with every member as much as we can. So if we have heard of a job loss, we offer skip-a-pays at the credit union where you can skip up to 2 months of no payments. So that's one way we try to work with our members. Review your credit report annually and try not to close the first credit card you opened. That shows history that you had a credit card. Car buying made easy. So we have a car buying service that's provided by Car Scouts. You tell them what you're looking for, the type of car you're looking for. They'll do all the negotiating and haggling for you. You don't have to step foot into a dealership. They'll deliver the car to the credit union, to your home or office, and you'll sign all the paperwork with our car buying service and never once have to go to a dealership. That's my favorite thing. As a credit union, we also offer auto, home, life, accidental death, and dismemberment insurance. So as a member, you get preferred rates for auto, home, and life. We also offer trust and estate planning. We have a partner that we work with. I can tell you from personal experience, losing a family member who had a trust in place made what was, of course, an overwhelming experience just a little bit easier because everything that the person wanted was in the trust, so we didn't have to think about it. Living trust and estate plans guarantee that your wishes are carried out should someone become incapacitated or pass away. They're for all individuals, no matter how old you are. They provide an effective financial management and healthcare decisions upon incapacity. Ensure the orderly and cost-effective and private transferring of your property upon passing. Care for any children or dependents. Direct assets to charitable causes or nonprofit groups. Minimize federal estate taxes and avoid probate. So that's a service that we offer. And also we do provide a loan in case you're interested in getting that, but at the time you cannot afford the cost of the trust, we do offer a loan for that as well. We do have retirement and investment planning as well. We have information in the back. We have a table with that information for investment planning. Financial education, financial resources. We offer GreenPath Financial Wellness. that no matter where you are in your financial journey, GreenPath offers something to help you move forward. Pasadena Federal Credit Union members get free financial counseling, financial education, credit and debt management, home buying advice and assistance, student loan counseling, and more. We know financial wellness is important as physical and mental wellness, and GreenPath can help giving you the tools to find more financial freedom. You can get free credit review from GreenPath financial experts, explore student loan repayment options, debt calculators to help you organize your financials better, make housing decisions. GreenPath can help you make informed decisions about your housing choices. There's worksheets and guides online, as well as financial courses online with GreenPath. Some of the worksheets I have used myself. Again, they're very eye-opening when you look and write down all the expenses and debt that you have. Membership. So as long as you live, work, or worship or attend school in any of the greater San Gabriel Valley, you're eligible to join the credit union and start enjoying all the valuable resources and products that we offer. Again, I just want to thank you for having me today. I have in the back, we have Veronica, our branch manager for our Lake branch. I know many members came to our table today, said they're already members of the credit union. We thank you for your membership. But we do have a branch on Lake at the Food for Less Shopping Center. We have a branch on Rosemead Boulevard between Foothill and Sierra Madre Villa. We also have a branch in Bell Gardens. And we have actually a student-run branch at John Muir High School. So in case you didn't know that. But if anybody has any questions at all?
Hi,
Yes.
Diana. I see a question in the back of the room. Just wait till I get the microphone. Are you sure? Yeah. Okay.
Used cars as well. They'll also take your trade-in. Yes, in the back.
I'm coming to you.
I have two questions. The first one's in regard to fraud. My data was leaked, one of those massive hacks. I signed up for the free monitoring service and I freeze my credit scores, but I still get phone calls and text messages that are clearly scams. Is there anything more that I can do, and is there any governmental protection, because I feel quite vulnerable? And then the second question is in regard to homeowners insurance. We currently have State Farm, and I know they want to increase the rates 22% year over year. So I'm curious what your rate increase looks like for areas that were impacted by the fire. Thank you.
Thank you for those questions. Unfortunately, fraudsters find new ways every day to make a new scam. They'll text you. I know a lot of the recent ones are texts. You just have to be very aware that if you do answer a phone call, do not give any of your information over the phone unless you know who you're speaking to, like you dialed your financial institution or you dialed that credit card company to talk to. Do not give any information over the phone. Don't give your social security number. Don't give anything over the phone unless you yourself initiated that call and you know who you're speaking to. Unfortunately, there's no way to stop those. Again, they come up with new ways all the time, whether it's online, whether it's through text messages. You just have to be aware and alert of what's going on. The second question, as far as insurance, unfortunately, I can't tell you what's going to happen with that. I used to work in lending department as well last year, and I know a lot of our members did get canceled and they had to find new insurance. That's not something I can answer to, unfortunately, but you can shop around and compare. I can tell you that if you do need to renew your insurance or you've been canceled, start looking at least 30 to 60 days ahead of time, because it is taking longer for companies to approve you as far as getting a homeowner's insurance. But unfortunately, I can't answer that as far as the rates.
I have another question here.
Really quickly, do you offer Spanish services?
We have our website that has a Spanish version, and all of our branches have Spanish speakers.
And do you also help with having parents open an account for their children?
I'm sorry, can you repeat that question?
Can you help parents open up an account for the children?
Yes, we have youth accounts. We also accept ITIN and matricula as forms of ID.
Any other questions? I have a super basic one, Diana, if you don't mind. I was talking to my niece the other day, and I was trying to explain why it's better sometimes to use a credit card instead of a debit card in terms of like building your credit, and I couldn't really articulate it.
To build your credit, a debit card does not report to the credit bureaus at all. So there's no way for them to know if you're making payments on time. That's mostly to use as a daily transaction. A credit card does get reported to your credit bureau. And so starting a credit card, whether it be a regular credit card for $500, let's say, or a share secured card, that will be reported to your credit report. And if it's your first time after using the credit card, paying off the balance, using the credit card, paying off the balance, use it for at least 6 months before you'll actually get a credit score. And try not to use the up to your maximum limit. You always want to stay 30 to 50% under your limit. Otherwise, if you max out your credit card, that will make your credit score go down.
And why do you want to have a good credit score? Like, what does that get you in life?
Credit scores nowadays can go anywhere from getting a better interest rate. We are a risk-based lender, which means the better your credit score, the better your interest rate. However, we're still a credit union, so as a credit union, we're not allowed to charge more than 18% on any of our loans. So if you go to a car dealership, you can get an interest rate with credit that maybe not so great, as high as 30%. So the better your credit score, the better of an interest rate you get. Anything else? Well, thank you very much.
Thank you so much, Diana. You covered so many important topics here. Understanding debt and how to build and protect your credit score is so critical in knowing how to navigate your way out of a bad situation, but it's also important in learning how to protect your future. And I believe it's something that all young women should know before they even turn 18 and they start getting credit card solicitations. So we've given you a lot to think about. It's time actually for a break. So this is your chance to stand up, stretch, grab something to eat or drink. But please also visit our partners around the room. But more importantly, please talk to each other and ask each other some questions and maybe ask someone what is the most important thing they've learned about money to date. So we'll see you back at 7. Okay, welcome back. We would love to hear from you. What did you talk about during the break? Would anyone like to share?
Come on, be brave. Anybody have any good shares? Kendall, I'm going to stop by you. Come on. This is my pal, Kendall.
Actually, it's kind of funny. I actually canceled 2 subscriptions.
What? Putting it into practice. High five, Kendall. That's amazing.
Okay. That's
Anyone
a win.
else?
That's a win. Anyone else? Okay. Over here.
I'm coming to you.
Hello, everyone. Good afternoon, or evening, I guess you should say. My name is Walina Logan from the San Gabriel Valley National Council of Negro Women. However, I did want to mention that I spoke to a young lady about how I think Miss Sasha had made an announcement about her mother giving her financial advice. And I said, you know, that wasn't something that was even spoken about. It was more of just put your money in the bank. And I said, I lost $35 all the time. So that was, you know, it took a while before someone came to me and said, hey, did you hear about this? Did you hear about that? And I'm like, wait, what are all those things you're talking about? I have no idea. So, you know, this is a great way to be here to learn how to empower yourself, especially as women, because unless your mom tells you or unless someone tells you how to use your money, how to budget your money, you really don't know. You really don't know. So thank you so much for letting us be here and allow us to hear everything.
Thank you.
Yeah, a study was done by the Girl Scouts Institute, and they found that girls learn 80 to 90% of their financial literacy from their mothers. So that's why this is so important. Okay. All right. Our next mini session is planning for long-term financial stability. It's probably the hardest topic for many of us to visualize, especially our younger attendees here. On a recent episode of my podcast, I spoke with Professor Hal Hirschfield from UCLA. His work in behavioral economics has found that people often view their future selves as an entirely different person, and that's really hard to connect with. So in his classes, he actually ages his students and shows them images of their future selves. And studies have shown that connecting with your future self can actually improve your savings behavior at a young age. And that can transform the way you then make your financial decisions over time. So early financial education is crucial for instilling these lifelong habits of saving and spending, because money grows on itself over time. That is such an important concept, and it's all based on compound interest. So starting young gives you a huge advantage. So I'm so pleased to introduce Maria Cater today, who I've had the pleasure of knowing and actually working with for many years. Maria began her financial services career in 1993 and is a certified retirement plan specialist. She's based here in Pasadena, but has advised institutional clients, including major academic institutions across the county, on their investment strategy. Please welcome Maria Cater.
All right. Well, good evening, and it's so good to be here. And I wanted to start off by thanking the City of Pasadena. On the upper left-hand corner where you see the Commission on the Status of Women, it says, "Empower women, empower communities." And I just think I'm very proud to live in a city in a city that recognizes that empowering women benefits the entire community. So thank you, City of Pasadena, and thank you to the Commission. Let's give them a round of applause. So the title of our session is Planning for Long-Term Financial Stability. And as they said, my name is Maria Cater. I live here in Pasadena. I've lived here since 1991. I came to go to grad school. Got a job right in downtown LA, working for a large financial company, and I have never left. Raised 3 boys, still raising them, and try to pass on some of these lessons in financial stability to them. But The word that we use in our family is not financial stability, although stability is such a great word. But I want to tell you a little story about my family. We use the word financial freedom. My family came to the United States when I was 10 years old. We fled a military coup in a country in South America. We were very well off. We had factories, we had land, we had family. In a matter of 6 weeks, there was a military coup. It happens in other countries, not in the US so far. But we were told within 6 weeks we had to leave the country and we could only take what we could carry. So we came to the US. We lived in a one-bedroom apartment. There was 8 of us. We ate a lot of beanie weenies, and if you ask any of my friends when we go camping and they want to make beanie weenies, and I always say I can't. It was just too traumatizing. But my father told us the story of being to have financial freedom and what that meant, that nobody can take that away from you. Sometimes there are setbacks like we had, and I've had, a number of them. But the beauty of financial planning is that you're going to be ready for those. You're not going to be caught off guard. And some of them you will have even planned for. So let's go ahead and dig in. The one thing I'd love to do today is, we heard a lot from the various speakers. We have so many great resources at the credit union. Please take them up on that. Financial planning, I heard them say they have financial planners. Go talk to them. If you want a financial planner and you want a female financial planner, I actually highly recommend that. I work with men all the time. That doesn't mean I don't trust them. But when you talk about money, I feel personally that I connect better with other women. It's not always the same for everybody. But so there are a ton of great financial planners, both men and women out there. Please take them up on their services. And I'll be around later. We'll send out some links later if you want some recommendations. Happy to do that. But what I thought I would do is talk about 5 easy steps, because so much came at you today. And so much great information. But if there are 5 things you could walk out of this room and do, or at least have an outline that you can do, that's what I'm hoping that I can convey here today. So there's 5 different things in creating a financial plan. And this is, you go online, there's a bunch of different ways you can do it. But this one is pretty good one. So number 1, you want to assess your financial situation and your typical expenses. And we heard Tanetta talk a lot about that. You want to set your personal financial goals. So you've got to make sure you take the time with yourself and write this down. And then, as somebody mentioned earlier, you want to then share those with somebody. You want to have an accountability partner. Those are fantastic people and resources to have. You want to create a plan that reflects the present as well as the future. You want to fund your personal goals through saving and investing, and I'll spend a little bit of time talking about the difference between saving and investing. And then last but not least, you want to monitor your progress. So you don't want to just set something and set it and forget it. I know a lot of financial people say set it and forget it, invest and let it go. I do believe in that, but when it comes to your plan, life changes so much, so frequently that you want to make sure that during these big life events, you want to come back and revisit your financial plan. Okay? So let's go through, and I'm just going to keep track of time here. Assessing your financial situation and your typical expenses. We talked a lot earlier, or we heard a lot from Tanetta earlier about creating a budget. And essentially that's how much is coming in versus how much is coming out. I absolutely think this is the first step. When you guys, gals, go home tonight, I would love for you to set some time aside in the next, let's just say 3 days. Let's hold ourselves accountable. Let's say in the next 3 days, let's sit down, go online, Google financial plan, financial planning tools. You can come talk to me after. I have a couple that are free, that are easy. Excel spreadsheet. I do mine all on Excel spreadsheet, just because that's how I like to do it. But you want to look at how much is coming in and how much is going out. You want to look at your current sources of income. So I think Tanetta covered this, but you have a primary job. I always have I call them my side hustles, and you guys are going to laugh. Sometimes side hustles are not just what your money being brought in, but it's things that you decide to do yourself that you would pay somebody else to do. So you're saving money. And those are really important as you write these things down. Go look at that and go, oh, I could do that myself. Do I really need to have somebody else do it for me? There's other things like my hair that I am not doing myself, right? I have a lot of hair. There's no way I'm going to pay somebody for that. But that's a really important exercise to go through and just be completely honest with yourself. And then there's other sources of income too that if you're online, you might read about. Some people are lucky and they have trusts that have been set up by a loved one. Some people have investments and they'll have dividends coming in. That is money, and that is very important money, and you want to make sure that that is in your plan. The next one is setting personal financial goals. And I probably should have put paying off debt as number one on the list. So I really feel strongly. I was just stream of consciousness and it came out third. But I really believe that's important. And when I got out of college, I had student loan debt. And that is a priority. But I will tell you in a minute, and I'll get there, just because you have debt does not mean you can't also save. And I'll show you some examples later on how you can do both. And the reason I think it's important is it creates a habit. And even if you're doing it and you're putting $5 away in a fund, in a jar, in a whatever, it's a habit. So create those habits early. Teach your children, teach your daughters, teach your sons to create that. You're never too old to start learning. Teach a fellow friend how to do it. But make sure that you're paying off debt, but you're also creating a habit of saving. And it might be little to begin, but it's very, very important. Some of the financial goals, I just listed some here that were important for me. I knew when I started that I wanted to be a homeowner. My father always said owning a home is so important. Now, completely different era. I have 3 kids in their 20s. I view home ownership, I have a slightly different view on it today, especially here in California. But it's incredible. It is an incredible asset to have, and it was one of the best things I did in my 20s was to purchase a home. Travel. Who in this room likes to travel? All right. I love traveling, and I was so lucky I married somebody who also loves to travel. But traveling is expensive. We started traveling very young, very budget travel, and then we've now gotten a little bit older, and we're starting to treat ourselves a little bit more. We're not staying in hostels, we're staying in hotels, but you grow, but also that means your travel budget has to grow. So think about that. If travel is important to you, make sure you put money away, because for us it was critical. We really enjoyed having something to look forward to. In fact, at every New Year's, our resolution was, where are we going to go this year, right? So for us, that was very important. And our kids now have that travel bug. And I tell them, I'm not going to be around forever to pay for it. So you guys need to start setting aside money for travel. So that was for me. Retirement. How many in this room are starting to think about retirement? How many of those had their hands raised? How many of you guys feel like you're prepared for retirement financially? Okay, so not as many. So not uncommon, but it is not too late. My father was self-employed. He did not have a 401k plan. He did not save. He thought he would be able to work. He felt young. He was lively. He's immigrated to this country. He was going to work for the rest of his life. But he had health issues later in life, and that wasn't possible. And he did not have money to fall back on for his retirement. And so that was one thing he said to me, is that I wish I would have had some sort of retirement plan. And even if you're self-employed, there are vehicles that you can put money away pre-tax or after tax to save for retirement. So to me, that's a key one. And then save for a rainy day. Has anybody in this room been laid off in their careers? Please show of hands. And I am one of them. Okay. When that happens, it's hard. But when you have that rainy day fund where you have money set aside, it's not the end of the world. You have a cushion. I call it, whatever you want to call it, a cushion, rainy day fund, but it's very important. And the rule of thumb that I was always given was to have 3 months of your income. So remember, go back to that budget. Oops. Go back to that budget. That's why we have a budget. You know how much is coming in and how much is going out. So make sure you have a realistic amount. 3 months is a nice safety net. I will tell you, after I had children, I bumped it to 6 months because I got very nervous. I'm very, very conservative, and so I always double everything they tell me. I'm like, I'm going to double it. But illnesses. If you get ill and you have to take time off of work and you extend your paid time off, rainy day funds help for that. Changing career. I was 45 years old and I decided I was going to take 2 years off to care for my elderly father. If I didn't have that rainy day fund, I could not have done that. I could not have been there for my dad when I needed to. And then I had the ability to, once he passed away, to really think about what did I want to do next. And I had a little teeny pivot, but I stayed in financial services, but I did pivot. And that rainy day fund gave me that cushion that really helped. So I want to make sure you guys understand the importance of that rainy day fund in your financial plan is critical. Anything else that you guys, goals that you want to just shout out that you don't see up there? Somebody earlier said saving for your kids' college. 100%. I had 3 529 plans for my kids. Very valuable tool. Really helped me help offset some of the expenses for my 3 kids. But did I miss anything? Anybody have like a goal that they want to see up there? All right. If you think of it later, write it down. Yeah. If you want to, business planning, that's a great goal. I love it. Yes. And does he have a goal too? Yeah. He's eating chips. I had 2 bags of those while everybody else was talking, so I like this kid. Okay, so the next thing I wanted to talk about was creating a plan that reflects your present as well as your future. So Marina touched on this, and I actually learned this from her podcast. She has interviewed a professor from UCLA, Dr. HERstory. HERstory, is that right, Marina? HERstory. And if you go to her podcast, make sure you go back and listen to that one. But this is so true that we have a really difficult time imagining our future self. What does that future self look like? What is that future woman going to need later in life? I will tell you, I remember this story. I was 18 years old, maybe 17 or 18, a senior in high school with my soccer team, and we got a new soccer coach. And what we heard was, she's a female and she's young. We were so excited. We go out to the practice field and a female shows up. She is not young. She introduced herself. She was 30 years old. Yes, that's what we all thought. We're like, she is old. And then now I'm in my 50s and I'm like, she was young. So we have my whole point in that is like, I never thought I would reach 30. I thought when I reached 30, I'd be retiring. Like I was like, what is she even doing here? So, and I will tell you now in my 50s, and I have friends that are my parents' age, so they're in their mid to late 70s, early 80s. I just realized when I was preparing for this session, I don't think I've done a good job imagining what my 75-year-old self is going to be, what my 75-year-old self is going to want. And so when we talked about our reset earlier this morning, my reset was, I need to go envision what I'm going to want and what I'm going to need, because we change constantly. I mean, I look around this room, we have all ages. We change constantly. And that is the beauty of these plans. You just go back, you revisit them, and you're able to adjust them. So steps in creating a financial plan, I already mentioned this. In the next 3 days, commit to yourself today that you're going to go write it down. If it's not on paper, if it's not in your computer, if you don't write it down, it doesn't exist. In your head does not count. It starts in your head. You're probably all thinking about it right now, but you got to go home and you got to write it down. Sharing it with a friend or a family member to bring it to life. When you start talking about something, you realize this is a living, breathing plan. It's for you. You are human. You're going to want to evolve it. You want to bring it to life. So find a group, find a buddy, talk about your financial dreams, talk about the different things that are happening in the media, like, what do you think this is going to mean for my financial plan? What do you think this could mean? Those conversations, those friendships, that accountability is incredibly important. And then visualize what your future self would want and what she's going to look like and what she's going to enjoy doing. So if you guys would indulge me, would you just take, I'm going to time it, 30 seconds and think about your future self in 10 years. What is she going to look like? I hear some giggles. I want to hear that one. All right, does anybody want to share what your future self looks like in 10 years? What'd you say? Skinny? Love it. Love it.
I didn't hear it. Who was that? Natasha?
He said be skinny again.
Okay.
Yeah, yep. Well, then, maybe eating out, you save money on the eating out, I don't know, gym, but then you have a line item for the gym, unless you just go for walks with your friends. Free. Go for walks around the Rose Bowl. There you go. Yes, talk, and then, yes, have a financial planning group that walks around the Rose Bowl.
Maria, there's another one back here.
Yes.
In 10 years, I hope that my CMOS business becomes more stabilized and more established, and being able to also promote that wellness for others. So
I love that. Yep. Wonderful. All right. What about right here? You guys were having fun talking about it. I want to hear.
Here I come.
In 10 years, I'd like to have a partner while still remaining financially stable.
All right, that is worth repeating. A partner while still remaining financially stable. I love that. Do not depend on others for your financial freedom. It is all about you. And we can all do it. So, all right, well, thank you for indulging me on that exercise, but I think it's important, and I think that also goes into your plan when you're planning. All right, the next slide is fund your personal goals through savings and investing. And we heard from the prior speakers about different funding vehicles, but I want to talk about two things, short-term versus long-term, right? So you want to save, and a lot of people use saving and investing interchangeably, and that's fine. They're two very important words. I look at them a little bit differently because I've been in this business for long. I think of saving as something more short-term. So I want to have money set aside for my vacation this year, right? So I have a long-term travel fund, but I have a this year travel fund, a 2025, because I know I'm going to have to take that money out to buy my plane tickets, to pay for the hotels, whatever I'm doing. So that's savings. Those savings they're different vehicles. So I think Diana mentioned, like, there's money market funds, right? So they're safe. You're going to withhold your principal. You're not going to lose money. You could do CDs, short-term vehicles. But that's what I would say savings. Put it in a savings account too. That's short-term. Your rainy day fund, I would highly recommend your rainy day fund. Have a big portion of that be in short-term invest in vehicles. You can have some of it in long-term, because for me, it was not until I was 45 when I really needed that rainy day fund. I was really glad I had that diversified between short-term and long-term, because it helped grow that fund as well. So that's important. But this is something, working with a financial planner or reading online. You don't always need somebody, but that's what you guys want to think about, with the short-term versus long-term. Long-term, I think about my kids' college funds. So when I started investing for them when they were born, that's long-term. I knew I wasn't going to need it for 18 years. Okay, so that's what you want to think about. And that, you do stocks. You can do aggressive bonds. You could do, and then within the stocks and bonds, you could do mutual funds, or you could just buy stocks. The other thing too is, how many people have a work for a company that has a 401k plan? Can you raise hands? Okay, that's so amazing, right? Don't take that for granted. A lot of those who have 401k plans or 403b plans or any sort of retirement plan at work, how many of us in this room will our employers also contribute to? Okay. So this is, remember I told you later you can pay off debt and save at the same time? This is the best and easiest way to do that. So the way it was explained to me by someone very dear to me when I was getting my first job at 23 was, if a company has a 401k plan and they have a match, so in other words, a lot of companies will say, we'll put up to 10%, we'll put up to 3%, but they are requiring you also to put money into that. If you don't utilize that, that is money that you are leaving on the table, that you're just saying no thank you to. So when I started and I had a company match, but I also had student debt, I put the limit, and at the time I think my company was matching up to 3% of my income. So I made sure no matter what I had to do that year, I would put 3% of my income into my 401k plan to make sure I got that company match. And when you start early, that compounds and it grows over time, and you don't touch it, you don't think about it, it's there, it's working for you. But that is the one place where I would say, make sure if you have a 401k plan that your company is gonna give you money, make sure you utilize that, okay? So that's to me, a really important piece of this. You already heard about, some of these savings accounts, IRAs. You could do Roth, traditional. You'll hear those buzzwords. All that means, Roth is you're putting the money away after taxes, right? So you get your paycheck, and then on the side you then deposit money into a Roth IRA. The other way you could do it is pre-tax. And I won't go into a lot of detail about the benefits of pre-tax versus after-tax. I'm around. Any of my colleagues here could probably tell you, and you could also go online. But it really has more to do with where you think you're gonna be when you need to take the money out. So it's an important concept to understand. And like I said, I'd be happy to share with you if you guys are interested. Also, I know the credit union, they'll know and they'll be able to tell you as well. But that is a question I would put in your plan and I would ask about. All right, I'm gonna bring it home now, and I think the last one we have to do is monitor the progress. So I said this at the beginning, you don't create a financial plan and walk away from it. It's a living, breathing document. I always tell folks to revisit it on an annual basis. And if you have friends and you have an accountability partner, you're hopefully doing it more often. But when you serious sit down and review of it, try to do it at least once a year. As you get closer to retirement, maybe, for you guys who are like early in your career, even if you did it every 3 to 4 years, but as you get closer to retirement, I'm doing it every year. Things change so frequently that you need to adjust for. The other thing that I realized when we came in here is I have a budget, I created a budget, and I myself probably haven't looked at my budget, and I was trying to remember, probably since COVID. So even those of us who are in the industry, we forget, and the budget is so key because I probably am blowing through my budget right now. But that's the importance of going back. It's like, I thought to myself, I need to go back and revisit the budget. So revisiting and monitoring your progress is critical. And that's one other thing, always ask yourself if you're on track. And then your track changes. So ask yourself first, when I set this plan up and I had those goals, are those still the same goals? And then say, if you need to tweak them, then you tweak them. And then you say, am I on track? And so right now, my big next hurdle is probably retiring. I've almost done getting my kids through college, and then it's gonna be all about me. So get the last one through, it's gonna be about me, it's my turn. It doesn't mean I haven't been investing all along, I have been, but our focus has changed throughout our lives. And so my next phase is me and my retirement, and I'm really excited about that. So I'm gonna stop there and see if anybody has any questions or comments or things that I may have missed from my colleagues.
Yep, coming to you. It helps to have a microphone.
Yeah.
go over the 529 plan again for parents and grandparents?
Absolutely. I'll do it high level for you, and I'm sure the credit union has people back there that can talk to it. But a 529 plan is a investment vehicle set up to pay for your kids' college and grandparents. And it's changed so much since I started 20 some odd years ago investing in one. The rules have changed and they're really generous. So it's not just college anymore. It's not just university. It's accredited institutions. If you have a child out there that wants to go to a trade school, you can use it for a trade school. You can pass it along. So if one kid gets a scholarship or decides not to go to college, it's not wasted money. You can transfer that to somebody else in your family, a sibling, a cousin. And you yourself could use it if you wanted to go back to school. So it is a great, great investment vehicle.
Maria, I have a quick question, Maria.
Yes.
You mentioned compound interest, and maybe that makes a lot of sense to you because you have a financial brain. But for those of us that don't, what does compound interest really mean? How does it work for us?
Great question. Okay, so I wish I would put a chart in here, but it's really fascinating. So compounding interest rate is when you start your investing, you're putting money away every year, you're getting interest and it's building. And as that builds, your base gets bigger. And then your interest rate is now being calculated based on the bigger base. So that money keeps working for itself. So that's why starting, even if you can only do, $100 a month, $50 a month, number one, it's the habit. Number two, you're getting that base in there, and that base gets bigger and bigger, and the compounded interest rate just keeps working for you. And there's some great, if you just look compounded, if you look at starting early, Google starting early versus starting late in a 401k plan. It could be anything. And it'll show you somebody who starts their first job 23 years old or 25 years old, to make my math easy, versus somebody who says, you know what, I don't have time. Somebody who didn't do this exercise of saying, what is my future self going to want, which is eventually to retire. They didn't do that exercise, or they had other things going on in their lives and they didn't start, and they get to be 40 and they say, okay, now I'm going to start. The difference between that 25-year-old and that 40-year-old, you will see when they get to be 60, 65, huge difference. Like the mountain chart is just, it's crazy. And that's just the importance, and that is all compounding, because you could have, at the end of the day, invested the same amount, but the person who started at 23 had longer time to start building on those crediting rates. So hopefully that helped a little bit. But I encourage you guys, Google it, because the charts out there, that's what always blew my mind, was like, oh, wow, okay. But you start whenever you can start. If you haven't yet, it's never too late. That's the other thing. It is never too late to start saving. All right.
We have time for maybe one or two more questions.
Hi. So most of my childhood was after the crash of 2008, and stocks to me are terrifying. All I know is horror stories, basically. Is there anything you can suggest to kind of bring some of that fear out of it? Because it's a big block in all of my financial stuff, is I'm just a lot of fear.
Yeah. Fear is an incredibly powerful emotion. It is a motivator, but it also can stall you. So turn that fear into something that motivates you. I would absolutely, I can talk to you after about it, but I think we're all feeling it right now. If anybody's in the market over the last couple of days has been incredibly crazy. That breeds fear. But what I will tell you is, if you have a plan, if you know where you're going, it won't let you sidetrack your plan. Now, what had happened to folks in 2008, 2009, because I lived through that one, is that it reset a lot of people. So people who wanted to retire in that time frame probably couldn't. And if they didn't have a rainy day fund, they certainly weren't going to do it. And if their rainy day fund was invested in the stock market, they certainly weren't going to be able to do it either. So it's real. It's terrifying. And all I can say is that having a plan, sticking to the plan, and having people you trust be able to talk is what's going to pull you through and turn that fear into a very motivating emotion. But I would love to talk to you because that is real. I mean, we all went through 2008, 2009. Some of us probably also went through the 1987 market crash, and we're living through a very volatile market right now. That happens, but again, it's the plan. It's having that long term. You know what you're going for, and you just. I always tell people, stay focused on your plan. Stay true to your plan.
Maria, do you think some of that fear could be mitigated by like a mutual fund where you're not picking individual stocks as opposed to like putting your eggs in one basket? Or how do you feel about that?
Yeah, absolutely. You can diversify, and so you're not all in one stock, or But mutual funds in 2008, 2009 also crashed. Like, it wasn't there was very few places to hide in 2008, 2009, right? And so mutual funds are a great tool because they diversify you, and you want to be diversified. But that's where in your plan you got to build in time, and that's like the rainy day fund, like, because life happens, and life sometimes is a market crash. When you think you're going to do something, the market crashes. So mutual funds can help, but sometimes you didn't drop as much maybe, but they still take you off course. All right. Yes.
Come in.
Could you comment on whether it's worth it to pay fees for a financial advisor versus just investing in an index fund?
I am a big believer. Everybody has their different ways to approach it. I'm a big believer in financial advice and financial planners. I'm in this business, and I have somebody that helps me do it. It's very complicated, and when you're younger, it's like when I was only investing in my 401k plan, I just did it on my own. But as you get older and life becomes more complicated, and you have tax implications, you have children, you have spouses, you have, for me, it's well worth it because it takes it off of me. The other thing too is I think most financial planners also have accountability partners because money can be very personal. And we talked about emotions. It's very emotional. And I knew myself well enough that I needed somebody else to help kind of guide my course. I didn't need it as much as maybe some others, but I find value in it, but it just depends on your personal circumstances. All right, I'm going to turn it back to Marina. Thank you guys so much. Oh, I wanted to say thank you to these translators. I'm so impressed. I am so impressed. I've been watching both of you and your partner back there doing this, and I speak multiple languages, but I can't think that fast. Like, that's amazing.
She doesn't have a partner, so
she's been doing it the whole time. Yes. Yeah. Okay. Now I'm leaving.
Thank you so much, Maria. Did you know that there's something called the gender retirement wealth gap? And that wealth gap is around 20 to 30% around the world, not just in the United States. So that gap is the difference between what men and women have saved over their working lifetime. So financial literacy and learning how you can plan for your long-term future is an important key to closing that gap. There are many reasons for that gap, but women having less financial literacy than men is one of the reasons. So that's why this is so important. I do want to address the question about the fear. The biggest risk you can take is actually not learning how to invest, because if you don't learn how to invest, especially at your age, then you are almost definitely not going to meet your retirement goals. So think about that. The long-term time horizon is what helps you, especially at your age. So, okay. I've learned so much here today, and I can really feel it in the room. I'm so happy. I can see the conversations, and I'm feeling empowered, so I hope all of you are. I wanted to take a moment to go back to the financial reset plan that you committed to at the beginning of the evening. So think about what you thought about at the beginning of the evening, and then think about this. Is there something that you heard or that you learned this evening that resonated with you, with your own reset plan, or something that challenged what you were thinking at the beginning? We've all been given a lot to think about, and that's because money can surface strong emotions. We heard the word trigger a few times. I've got a few financial professionals here in the room, and we all agree money is not just about numbers, it's a very emotional thing. And learning how to navigate those emotions is a part of learning how to handle money. So we can feel slightly uncomfortable, or we can feel re-energized to move forward. So why don't we think about that, and let's take a few moments to reflect with your neighbour. It could be a different neighbour this time. And then we're all going to make a final commitment. So think about something that maybe challenged, changed, or recommitted you. Okay. So we'd love to hear either what is your final commitment, or what challenged you. That's what I'd love to hear. Did something challenge your thinking today, or are you re-energized? So please, I'd love to hear.
Someone want to share?
Yeah.
So last year, my resolution was to really understand my budget and track my expenses. And now a year after that, I've looked at a whole year of expenses that I've made, of all the contributions, 401k, all of it, and the numbers. And so now I have that information built. But what empowered me today was basically now I have a direction to focus, right? In 10 years, in 20 years. What do I want now? What do I want in the future? So I think that just having that conversation, which is not a conversation I would have with family or a lot of friends, but that is very empowering to just think about and really have some goals for your needs and wants. So that.
Yeah, fantastic. Congratulations. Yeah.
Anyone? Oh, I see your hand up. I'm bringing you that microphone.
We were just sitting talking about the differences between the plan and the budget. What actually does that mean to have a plan, and how does it work in conjunction with the budget? And so my girlfriend said that the budget works as a part of the plan. So we're sitting here well, what does a plan even mean, right? And what is the ultimate goal? And for us, it's not to be working for other people. That's where we want to get to. But that encompasses so much, right? So how are we going to build this residual income and passive income to be able to sustain ourselves in times of need, or as life progresses and changes? How are we going to do that? So all that to say, we don't know. But our commitment to one another is to actually just sit down and think through what a plan might be and to put that together.
That's fantastic. And even better if you're doing it in a group, because now you have a support system.
Anyone else? Time to share. Yes, I'm coming to you.
Mine was the budget, and the problem is that I like to spend, and I am gratified by what I get when I get it, and I'm never sad about doing it. And so I have to learn to budget and be real about my needs and my wants, but I don't want to. I actually am enjoying getting what I want and doing what I want to do when I want to do it. Because so long I had to budget. And now I'm at a point where I don't want to do that anymore. Not trying to influence any of the younger people here, but there's something psychological going on. Absolutely. And I can't figure out how to put a stop to it.
Okay, So if you like spending, pay yourself first, right? So pay yourself. Yeah. Okay. Okay. Anyone else like to share? No.
I see one more.
Yeah.
Hello everyone. Voy a pedir ayuda para traducción en español. Realmente me parece muy importante y quiero hablar del cambio que este espacio me abre y cómo ha surgido en mi familia.
To be honest, this whole thing has been so important for me and I'll tell you how this has changed my family.
En el Centro Jornalero hace 2 años y medio atrás tuvimos un taller como este y agradezco a las personas, ¿verdad?, que pudieron brindar el taller.
2.5 years ago, we had something like this at the Labor Center, and I thank those people so much for doing that back then.
Y pues en ese entonces no tenía un plan de ahorro, realmente dinero que entraba, sí somos responsables pagando nuestros gastos, pero dinero que quedaba de igual manera lo gastábamos y lo disfrutaba como dice la compañera.
At the time, there was no such thing as a little savings plan or a little something to put away. We didn't really do that. We learned how to budget our money, and then whatever was left over, I did what she did. We went shopping and blew it all out.
Claro, a todos nos gusta gastar y lo disfrutamos. Pero realmente me impactó y aprendí cómo crear un presupuesto y desde hace 2 años y medio lo hacemos junto con mi esposo, compartí la idea.
2.5 years ago, my husband and I learned how to build a budget. Together, we worked on how to do this budget. And you can't imagine how that changed my life.
Entonces, quiero compartir que primero lo que entra, que son nuestros ingresos de ambos, pagamos pues todo lo que es necesario.
The first thing we do is when our money comes in, both our incomes, the first thing we do is we pay off the necessary, right? The need.
Y de ese mismo fondo creamos una cuenta de ahorro fija que no tocamos.
And then from that very same fund, we both created a savings account that does not get touched.
Y pues de lo que queda, pues sí me gasto lo que sobra, ¿verdad?
And then of course, I spend what's left.
Somos familia de 4 y también a los 4 nos gusta viajar y gastar.
There's 4 of us, we love to spend, we love to travel, the 4 of us like to do it.
Pero escuchando lo que compartían las compañeras acá, mi pregunta viene y todo, ¿verdad? Creo que tenemos ese miedo de invertir porque ahora sí tengo un ahorro, pero siento que está estancado.
So I feel like my savings is a bit stuck, and I'll tell you why. We're not used to investing. So now that I've saved, thank you, how do I invest? It's terrifying, like you said. So now that's kind of where I'm at now.
Entonces, el estar y compartir en este espacio me motiva a perder el miedo, como compartían las compañeras aquí enfrente, y interesarme, ¿verdad?, cómo aprender sobre las inversiones, ¿verdad?
So thanks to all of you, and I mean, I'm not alone. It is scary, but now I'm really interested in learning how I'm going to invest this money I worked so hard to save.
Gracias y esperemos que estos espacios se sigan abriendo en toda nuestra comunidad. También quisiera que se expandiera a nuestro centro comunitario de Pasadena. Trabajamos con compañeras jornaleras y realmente a veces no hay un ingreso fijo, ¿verdad? Porque la mayoría de mis compañeras trabajan en limpieza de casas, entonces es variante.
I'm sorry. Many of my friends here, we all work at the Labor Center. And as you know, the way that works, there's nothing for sure. We clean houses one day, the next day we're helping an elderly person. So it's never the same thing. So it's hard to do like a direct budget when you don't have that. But now, like, I'm really hoping that something like this can come to the Labor Center, can come to our community. ¿Cuál otro lugar dijo que le gustaría? Is it? Okay, so those places, because there are a lot more people that need to hear this story.
Yeah. Gracias por abrir estos espacios.
Thank you. Thank you so much.
Wow, I'm speechless. Look, we hope you will feel supported by the community here today and that you'll all stay connected. Oh, we'll have another question? Yeah, please make a comment, yeah.
Are we back? Yes.
Hi, everyone. My name is Justine. This is my partner, Abby, here. We work at the city of Pasadena, and with everything that's going on, to answer your question, actually, the young ladies right here, we are financial professional. We're here to actually just volunteer our time. We do complimentary review. If anybody wants to know if they're on track for their retirements, help with their children, grandchildren, for retirement, we want to be able to volunteer and give back our time to be able just to give people clarity and some comfort in what's going on, taxes and everything else. So we're going to be here. If you have any question, you could just come and talk to us. We could exchange number and be able to sit down and answer those questions for you. Abby speaks Spanish as well. She spoke to the ladies here. But we just wanted to introduce ourselves and be able to be a resources to the city that we work and to be able to resource it to the ladies and gentlemen that are here as well. Thank you.
And I will be the person who follows up with everybody after the event and shares the slides, and I'm happy to share contact and resources. So I have a card, I think, from you guys, so we'll make sure to share that out to the entire group.
Okay, great. So most importantly, stay connected and use the resources that we have here today, and keep up with your support groups. Now, most importantly, I think, though, it's important to know that this is not difficult, I have to tell you. There is no fancy strategy, there's no big investment banking fancy thing going on here. It is very, very simple. You just have to start and make the first step. And that's your first step to your financial well-being and a better future. So thank you all. It's been a privilege to facilitate tonight's workshop, and I want to thank everyone for listening, sharing, and being vulnerable most of all. We've all learned from each other. Our last speaker is Commissioner Jennifer Thibault, who would like to share brief closing remarks.
Thank you, Marina. And I just want to take a second to thank all of our presenters, Tonetta, Diana, Maria. I think I speak for everyone here tonight when I say that you have given us so much to think about. We truly appreciate you all sharing your expertise and your time. They all are here for free. We did not pay them a speaker's fee. They're taking nothing from this. So we do have some small gifts for them. Crystal, in that bag right there, if you could maybe pass those out to our speakers, that would be wonderful. And if everyone could just join me in giving them a quick round of applause. The Commission on the Status of Women has a very big mission and a teeny tiny budget. And we are incredibly fortunate to have generous sponsors who step forward to help us cover the costs for HERstory this year. So I want to thank you to the Pasadena Federal Credit Union for underwriting the cost of tonight's refreshments from Lee's Hoagie House. And if you all can stop by Lee's Hoagie House, it's on it's on Colorado, right near Sierra Madre, and they are an excellent supporter of community and gave us a great deal. So happy to shout them out. It was important to our commission to make tonight's workshop as inclusive and accessible as possible. So I want to thank Supervisor Catherine Barger for her office's donation towards our English to Spanish translation, and to Cameron Perman, who for donating her time to do ASL interpretation services. She's doing this for free, and she's amazing, so good job. I wanted to thank the Rose Bowl Legacy Foundation. They underwrote our printing costs. So we have these beautiful signs that we printed, and they're evergreen, and we can use them every year, so we're very grateful to them. And finally, thank you to the City of Pasadena Parks, Recreation, and Community Services Department for all of their support. We could not do it without their support.
The City of Pasadena is incredibly fortunate to have a vibrant network of nonprofit organizations and government entities that provide critical resources and services to our residents. We invited a very select few to be community partners for HERstory, and we are so grateful to them for joining us tonight. So thank you to FEMA, to Friends Indeed, HPP Cares, Pasadena City College, Pasadena Federal Credit Union, the Pasadena Community Job Center, San Gabriel Valley National Council of Negro Women, Shepherd's Door, and that'll do it. So thank you to all of them. And I would be remiss if I did not reiterate thanks to my fellow commissioners. There are 9 of us on the commission, but we have a smaller ad hoc committee who planned HERstory. So thank you to Crystal Aceves, Gabby Perez, and Ziandri Peralta, who's over there on the slideshow. Thank you, ladies. Finally, I want to thank all of you. You were invited to join us tonight and take the first step towards your financial stability and independence, Maria's word, freedom, and you showed up. It's been a rainy week. I'm sure you had a million other things to do, but you came, and so thank you. You showed up for yourselves and for your future selves. And I just want to say thank you for listening attentively and asking great questions. And I encourage you to use the resources that we will send by email. You can rewatch the video from tonight and share it with others. Take a follow-up financial literacy workshop or class. We're going to send you a couple links by email. Listen to the Banking on Girls podcast and keep investing in yourself and your future. So happy Women's History Month, and we will see you next year for HERstory. Thank you. Good night.